Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, in BC, a report came out Friday saying money laundering probably added 5% to housing prices in BC. But I recall the CMHC report quite some time ago now that couldn't account for 40% of the mortgage money being spent here. And your solution right then was, well, obviously it's money laundering and it's not just $5 billion. What was your calculation? 13 or so billion dollars of secret money coming into the market in Vancouver and, of course, driving up prices. So it seems, Ross, that your calculations now have been vindicated. And again, perhaps theirs hasn't caught all of this mysterious slush money.
Yeah, it's a funny thing. You know, you watch these things a couple of years later, Jim, come to be true. When you first say these things, I remember when we did the first Ponzi currency exchange Ponzi scheme topic way back in May of 2016. I mean, I certainly never would have at that time said that it was criminal money that was coming into the Vancouver market. But you know, there was really no need to say that it was criminal money or that it was being laundered money. It was just capital. You leave it to the authorities to take your research if they so desire or choose to ignore, which I believe in my case they ignored it, and they can come up with the solution where the money is. I mean, this is no different than we've been on the show here talking for years now about the need to collect the FINTRAC forms that are to be available to be collected at every real estate brokerage in the province, and then every developer who has dealt with a buyer or seller over the last 10 years. Those forms still have not been collected. So,
and
I
Ross,
think really
if those forms really, I was thinking right away about the FINTRACs. How often do they call them in? And they should tell you who's involved, who bought it, where the money came from, and couldn't they civilly go after those people? And what about people who were given this mystery money, as I call it, who were bought out and took that money and bought new properties? Are they liable in any way?
Well, I think the liability now is probably just for if they want to go back and prosecute the people who were involved who didn't fulfill their legal requirements. So while I was selling, I think we said this in the show a couple of times, houses for a living, I did a FINTRAC personal ID form for every single buyer or seller, husband and wife, anyone connected with the real estate transaction, where I received money or my client was putting money in on a property that they were buying. I did that because when the FINTRAC legislation first came out, realtors were targeted, and we were told that we would face up to a year in jail and a $250,000 fine if we didn't do what we were told to do by the government. So all I can say is in the province of Ontario, certainly the brokerages that I worked at, there was a form filled out for every single person involved in a real estate transaction. I mean, I couldn't get a commission check from my broker. Even though it was my money, I couldn't get the check unless he had those forms on file. Those forms, Jim, required me to have government-issued ID and review the ID matched with the person I'm dealing with. If it was not Canadian-issued government ID, if it was ID from another country, or they were supplying ID that was not government-issued, then I was under the requirements of the Act to report a suspicious transaction. There was no risk to me, Jim. The government did not care if I made a mistake, misreported someone. All they did was they wanted me to report so they could investigate. Now, in my case, I always was dealing with Canadians, even new Canadians, so they had their documentation available. I never used a passport, a non-Canadian passport, for a form of ID. Most of mine were government-issued driver's license photo IDs. You wrote down the type of ID that it is. There's a spot right on the form for this, and you can write down a partial number. You're not supposed to write down the full number if it's a driver's license for the sake of the argument, because there's privacy issues. After I collected them, Jim, I had to keep them under lock and key in a safe location, because I was now responsible if those forms were stolen and something was done with the information on those forms. My broker also had a copy of the form. He, too, had a strict policy on how they were to be stored and under lock and key. I just ended up, not too long ago, disposing the last of my forms because the reporting deadline had passed and they had never been collected. They've never been collected in British Columbia as far as I know. Although, 2 years ago, supposedly, there were over 500 cases cited by FINTRAC with real estate brokerages in that province for failing to comply with the regulations. I don't believe there's been any charges in all of those over 500 cases. Why? I mean, this is, if you're looking for a conspiracy theory, Jim, this really has to be one of them. This really has to be something that, you've really got to think about. Money was coming into the province of British Columbia. That money was non-Canadian sourced. Okay, so whether it was money laundered through a casino from the Bahamas or the Panama banks, whether it was money from China via Kurt to get money out of China, whether it was gang money, whatever, the money came out. The housing market was not moving with enough local money to make the prices happen. And the consequence now is far, far greater than they're trying to downplay with this 5% house price change. Now, the 5% house price change is technically a myth too, because it really wasn't the money that caused. I can facilitate enough house price illusion over 12 months to get a 30% year-over-year rise in house prices in the city of Vancouver, as you recorded in the spring of 2016. I can do that with simple real estate math, how a housing market works. That's why we call it house price illusion. But what I couldn't do is I couldn't use the documentation, i.e. benchmark price, i.e. houses are selling as quick as they're going on, i.e. they're being bought by foreign investors, i.e. they're buying foreign money, creating the fear in the public for the public to do things that they want to do. And that now is gone. And this is the problem that you have in Vancouver. You have this problem in Vancouver in a very, very major way. Your property ladder is broken. The property ladder in Vancouver is broken. And I believe over the last 15 years, your housing stock has been damaged as a consequence of that. We were looking at some numbers recently, Jim. We track property ladders in every market that we're working in. Now we need to track property ladders like we do all the other metrics we track, because we need to know what the spread is between a condo buyer trading up to a townhouse buyer trading up to a semi-detached, trading up to a detached trading up to an luxury class detached. We need to track all these sort of things because that's how a housing market works. And on a national level, let me give your listeners a little taste of what good housing market intelligence will tell them. The median income for the first step in the property ladder nationally in Canada is only $37,950. So if you're a median family in Canada who earns $37,950, i.e. often a single person, you can afford to buy into the first step of the national property ladder. The last step is for those earning over $200,000 a year. So the spread between the first step and the last step is manageable by the way that the population earns their income. So if you look at population groups, you can see that there's enough income to navigate that entire property ladder. You can go from a $215,000 house in Canada to a $1.15 million house simply based on families working their way up the property ladder and understanding the higher you go up the ladder, like a ladder actually is shaped, the fewer people keep taking the next step. I mean, it is a pyramid. It's a pyramid for a reason. Now, if we look at Vancouver, Jim, at Vancouver, this is what is really shocking in this new research. A first-time buyer, the first step in the property ladder in Vancouver, now meaning the real estate boards, East Vancouver, West Vancouver, Vancouver West, and North Vancouver. In those areas, so the major city of Vancouver itself, the first step in the property ladder has an entry point of a maximum $740,000. You have a $140,000 qualifying income to purchase that home. And that's even with the low property taxes that you have in Vancouver. That first step in the property ladder in Vancouver is actually the fourth step in the national housing property ladder. It's actually the third step in the British Columbia property ladder. But here in Vancouver, it's the first step. The last step, Jim, the last step in the Vancouver property ladder is buying a $4.3 million home. That is impossible. It is impossible for local people to do that. You can see that there are people in Canada who may earn $200,000 household income to buy a $1.15 million home. $1.15 million home. But you're not going to have enough qualifying income of enough people to sell a $4.3 million home. And that's because money, capital, came into the Vancouver housing market disproportionately than the rest of the country, and it broke your property ladder. And what I'm really concerned about, Jim, from this money laundering report and this fake house price 5% claim is, right now, the property ladder in Vancouver, to get on that first rung, it is going to take some families 4 trades to reach the top of that first step. 4 trades. Where the rest of the country, by that fourth trade, is already buying a top-tier property in the country, Vancouver home buyers would only be on the first step. There is no way for this to be resolved with the way that they're talking about doing it in Vancouver. You have a broken property ladder. Your housing stock is not constructed in a way that allows the free flow of local Canadian income-produced capital, so for families to work their way up the property ladder. It is impossible. Even the second step of the property ladder in Vancouver today is equal to the top step of the property level at the national level. There are not the incomes in Vancouver to support that. So you have a broken property ladder that cannot be fixed by government policy. CMHC, talking about housing affordability, resolving it. The federal government. These bodies cannot repair the property ladder in your city. You need massive building going on, and you're going to have to assume that your building is going to move out into the suburbs. That means rapid mass transit has to be built up if you want to maintain this city. There is no way for a family earning less than $140,000 in Vancouver to survive as a homeowner. You are going to have to rent. Rents put pressure on the rental stock, inflating the rents. There is no solution currently available to you until the government realizes they should have been looking for money laundering way back minimum when we issued our report in May of 2016, which we didn't call money laundering. We just said currency exchange Ponzi scheme. That's all that we said. That your property ladder is not going to be repaired. You have some hard decisions to make out in Vancouver. Not the same here as in Toronto. Toronto does not have to make these same decisions. There is ample land to build enough housing stock to fix the problem that they have here in Ontario right now. In Vancouver, you have a major problem. And I'll tell your listeners, ask the government for proof. Ask them to prove it was only a 5% house price change. They included no data in that entire report, Jim, that proved their point. They didn't even provide data that allowed you to accurately, even vaguely, come to that conclusion. And what I'm telling your listeners are, if the top run of the property ladder in Vancouver is $4.3 million, and the first run is $740,000, there is no way possible governments are going to resolve this problem. Even this housing correction is not going to resolve this problem. It may lower the threshold for the first step of the property ladder. It may lower the threshold for the second step of the property ladder. But even if it's lower, it's still going to be the fourth step for the rest of the country. This is a unique situation in Vancouver. You are not having any solutions being offered by your governments today. There's only way to get this resolved, and that is for someone to go in and discuss the housing stock in that city and discuss some hard realities about the choices that are going to have to be made. They are not choices any politician is prepared to make, because all politicians want is to get reelected. And if that means hiding money laundering, only causing a 5% change in your house prices, that's what those politicians will do.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, we have a question here on property taxes. Do property taxes impact a housing market at all?
100% they do, Jim. Your property taxes are something that is vastly misunderstood again. And, you know, I can go back and, Jim, and look at government reports done on property taxes. Most of these reports were from the 1990s. And maybe that's where the problem is, Jim. I mean, we're now 19 years into the new millennium here. So maybe the problem is because all of this type of research looked back when interest rates were above 6%. In most cases, between 9 and 7% on a 5-year term mortgage. I look at these old reports, and they totally misrepresent today in the report and I'll use this example for you. The average Canadian family, the majority of Canadian families today, pay more property tax than any other tax they pay. So let that sink in, folks. Whether you're renting a property or you own a home, the majority of those people in Canada, families, pay more property tax than they do income tax. They pay more property tax, housing tax, than they do GST. Now, let me explain to you why that's the case. Your income tax rate, you receive transfers and government credits in exchange for whatever tax you pay. If you make minimum wage, dual income minimum wage family, you effectively pay no income tax. You receive more services than you are delivered for your income taxes. Remember, we have a healthcare system that is funded through the income tax system here too, folks. That leaves property taxes, which every single family who lives in somewhere with a roof over their head in Canada today pay. If you're a tenant, part of your rent each month pays all of the property taxes for the building that you're living in. All of it. After your property tax portion of your rent comes out, then your landlord takes whatever else you give him to service his debt and to do his renovation and maintenance on the property that you've rented from him. But the very first money to come out of your rental payment each month is the property tax. It's funny. Tenants often don't realize they are equal participants in the economies of their municipality because they pay all of the property tax in the building that they're living in. Exactly the same as an owner who pays the property tax on the building that he or she lives in. Now, what happens if the average tax on a property in Canada was 1.2%, which back to the most recent survey done by the Government of Canada was 1998, and that was exactly what the average tax payable in the country was, 1.2% of the property's value per year. If you look at Vancouver, folks, Vancouver, you're looking at about 2.25%, 0.25% of what the value of that you pay for property taxes. If you go to other parts in the country, it's up to 6 and 7 times higher than that. What that means is that your property tax portion of your monthly housing expense is lower than it is in Vancouver than it is in other cities, which in turn means the value of the property can be higher when a home buyer buys the property because they don't have to pay as much money per month in property tax. These are basic financing qualification measures that are used for every single home buyer across Canada forever. I mean, it's just everybody has to do it this way. When your property tax is undertaxed, not only does your society fall apart, not only do they not have enough money to deal with your homelessness problem, not only do they not have enough money to repair roads and streets, not only do they not have enough money to do anything that the provincial or federal governments download in your local municipalities, but it automatically causes your house price gains to increase. And this goes back, Jim, to our previous discussion about the property ladder. There are so many factors that impact how much house prices can go up. I don't think that governments or politicians have ever sat down and understood what those factors all are. Whether it's money being laundered, Chinese buyers taking away properties from Canadians, whether it's low property taxes, which means people can borrow more money, which artificially inflates houses. Your listeners have to understand, it's not just one house that this happens on. It's a cumulative effect, which we call the multiplicity of sales. The multiplicity of sales is the cause for most of the problem in the housing market, because it's a phenomenon or a function that is not understood by those studying a housing market. The multiplicity of sales means that $37,000 boost the government gave for condo buyers in 2017 in Vancouver, it multiplied its impact on house prices, house price illusion. And now that it's been removed, it's going to multiply on the way down. It just takes longer on the downslide for anyone to realize what's going on, because fewer and fewer people are buying. Obviously, when more and more people are buying, things look like they're moving quicker. Prices are moving quicker. When fewer and fewer people are buying, it looks like it's slower. So you don't see prices dropping as much as they really are. That's called the multiplicity of sales. Property taxes have a direct impact not only on the price you will pay for a home, it will also have a direct impact on everything you do in your life. Where the resolution for the housing problem that we have in the major urban cities in Canada today, which are rooted in an underbuilding of the housing stock and the selling off of the housing stock to non-Canadians. So two things in tandem. The net result, of course, is the same thing. There's not enough homes. The solution is for local voters to vote in for the sake of the argument, a national housing party. Vote in a national housing party. If you are going to vote for someone, a politician, who is not saying how they are going to, with data and facts, they are going to grow the housing stock as rapidly as possible, don't vote them in. If they're talking about green living, and their term of green living is a salamander that crosses a road, which is going to prevent 2,000 new homes from being built across the road, then don't vote them in. Because you can't have it both ways. We can build green in this country. We can build sustainable homes. We can build net zero homes. There's no problem with that. And when you drive the land cost down by opening up more land, the overall price of your house drops. And this goes back to property taxes. I encourage every listener, specifically in Vancouver or in British Columbia, eValue assessment splits up land and building costs on their assessment. Now, BC is the only place in Canada where this data is so readily available to the public. For us to do it, we have to go into a manual assessment in the province of Ontario. We're in British Columbia, now we can just pull it up in a second. When you see land costs at 95%, eating up 95% of your assessed value, and your house cost only at 5%, you have a problem. The government, what that tells you is previous governments, for a very, very long period of time, have constrained the available land to be built on, artificially driving up land prices. There's many ways they can do that. We won't put transit in. Okay? That means we're going to drive up the local land prices. We're going to put transit in. Okay? That's going to lower the local land prices. We're going to add density. Oh, we're going to build affordable housing. Well, what affordable housing effectively does is it puts more pressure on the housing stock. It gets you into that first step in the property ladder. What was that unit you were talking about, Jim? What kind of a bed did it have in it?
Well, a brand new tower in New Westminster near the SkyTrain station, 500 square feet for $500,000 with a Murphy bed.
A Murphy bed. So you can allow the government, politicians, you can elect politicians who will give you a Murphy bed to sleep on in a little tiny box where you don't have a patio in most instances. You don't have a nice area to go and walk around in. You can vote those people in, or you can choose to vote someone else in who's going to open up the land and allow you to have less density, a larger house to live in. Because I'll tell you folks, all the governments are doing is controlling the population and controlling your choices. And by us continuing to vote in parties who are not trying to improve the lives of the voters, but parties who are trying to constrain our lives so they can wring more tax dollars or wring more control out of us, we are the ones that are going to lose. And your property taxes are the place to start. Your local municipal government. If the city of Vancouver's current government does not agree to build 20,000 new housing units in the next 5 years, turf them. If they do not agree to move in on areas where previously it was sacred ground with development, i.e. part of your UBC grounds or golf courses or or recreational areas, don't vote them in. Because what they're effectively doing is constraining your life. You pay more property tax on your income, more of a housing tax, which is another problem, by the way, Jim. I think we should call it what it is. It is a housing or shelter tax. You pay a higher percentage of your income to the shelter tax than you do to the federal and provincial taxes. This is for the majority of Canadians because you are not receiving equal value for your tax dollar. You receive more than enough value on your income tax paid because your transfers and are worth more. So, at the next election, if the party running is not telling you how they are going to add homeownership housing stock in the next 5 years, don't vote for them. You want to see concrete answers how the homeownership stock, not rental stock, not affordable rental stock, not subsidized rental stock, homeownership stock is going to be grown. Don't vote for them. Because remember, homeownership wealth is a great equalizer. There is 50 years worth of data with every government agency in this country proving that fact 100% to be true. Don't listen to the arrogance of an Evan Sedels from CMHC who says we need to stop glorifying homeownership. I don't think anybody who owns a home glorifies it. What I think they do is they say in a rational and factual way, owning your home is the best way to build wealth in the history of Canada, in the history of the world. So why fight against history? It makes no sense. Your local property taxes are determined by your local government. What your local government does with that property taxes to improve your life, i.e. build more housing stock or not, is your choice. Your local municipal vote is far more important than your provincial or national vote. And you're using your dollars to make that statement when you pay your property tax every single month.
We'll have more with Ross Kay right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, the news headline stated, engineer stripped of license after admitting Surrey, BC condo tower fails seismic code. Is that a sign of the poor quality you mentioned on the show, or is it something else?
No, I think it's not a sign of poor quality of houses, although those condos will be of a poor quality because of this. But you look at all of the nonsense you have in a housing cycle. So in a home trading cycle, Jim, normally these things don't get out of line. In other words, they only go on long enough that you start to get a little bit of problems, but then the problems themselves stop the housing market from moving forward anymore. In other words, there's always going to be a qualified engineer who will put the proper use the proper codes in determining whether or not an earthquake is going to hurt the condo building. It's only after a housing market goes on too long that the low-lying fruit starts to put up drywall, hammer nails, or work on an engineering algorithm for the code to determine the seismic protection of a condominium. It's only at the end where these low hanging fruit are hired, which is another problem with that misunderstanding of the housing markets. Because there was no need for us to be where we are today. There was no need for the housing market to have gone on past 2013. It could have ended, could have been a little cycle, and then we could have started the next one. There was no need for it to continue on the way that it continued on, other than arrogance and ignorance of those overseeing the housing market. This engineer is simply a consequence of a trading cycle that went too long, and he is no different than you move into a new home and the walls are not straight because it's not an experienced framing contractor who put those walls up. It's some new guy who never had enough time to learn his craft. Things can only go so quickly. Once they go beyond that, you start to get problems. I think that's an example of what we're talking about here. You end up building a lower quality product that you pretend is a higher quality on the day that people move in.
Ross, another thing that we had here sent to us, a listener asked this question. The agent writes at the end of the description, seller does not warrant retrofit status of finished basement. What the hell does that mean?
What does that mean? What that means is you've got a group of people out there covering their butts. They are unprofessional, they are unqualified, and they are unskilled in the art of selling homes. You have someone, a listing sales rep or broker by the sounds of it, who does not know how to check the simple status of a basement to see if it's legal or not. In other words, was the wiring done properly? Can I get insurance on it? What were the plumbing fixtures installed properly? Or are they going to blow apart? They're not competent to do that, which also is a red flag because it means that there probably weren't permits for it. It probably was a hodgepodge reno redo. What your listeners need to understand is that when you're buying a home today, these sort of things no longer matter if you buy the home in the proper way. There are clauses, there are procedures, there are simple, common sense ways that all of these problems are prevented from happening. A red flag, seller does not warrant anything, is a red flag. But in all fairness, Jim, that red flag really shouldn't even have to be raised in 2019. We are at a point where rules, regulations, technology and services are available that any home buyer in Canada should not have to worry about this. The problem you have is you've got realtors involved in the process whose only goal is to get a home sold. It's not to do all of the hard work or make the phone calls necessary to get the hard work done to make sure that things are a safe purchase for a home buyer. If I see seller does not warrant retrofit status, if I see the word renovation, if I see the name retrofit, if I see, unverified, these are all red flags that every home buyer should avoid. When we have the reason we have our home buying program and why it's no cost, zero risk. The only reason we can make those claims with arrogance is because there are services, there are tools, there are methodologies all available today to make those things happen. So when you read, seller does not warrant retrofit status or newly renovated home, no guarantees in place, I can tell your listeners is you don't have to buy the home that way. You can buy the home fully assured of a warranty on the status of the finished basement. You can buy any home knowing whether or not the work was done properly, and you can get insurance in the property. There is no reason any fraud has to be committed against any home buyer in this country anymore. But when you're dealing with a realtor, they're not going to approach it that way because there are rules and regulations that actually prevent them from approaching it that way. So you have two choices. You can call a lawyer and keep the lawyer abreast of everything that's going on, and before you sign in the dotted line on anything, have the lawyer approve you signing. The other is to seek advice, which inevitably will involve a lawyer in the process as well. I mean, our programs all include a lawyer oversight. You need to get advice so that you're not taken advantage of. And that's exactly what this person was reading. Seller does not retrofit status on the finished basement. The listing brokerage is not responsible. The seller is not responsible. The contractor is not responsible. The buyer broker is not responsible. All the responsibility falls at the feet of the buyer. It is 2019. It's not 1999. It's not even 2003. It's 2019. There is no need for any home buyer in Canada today to have any of these worries when they're buying a home. They should be able to sit down, do the finances, know what the house is going to cost them over the next 30 years, have a rational decision with what's going on, make sure the checks and balances are in place before or during the buying process, and they start their home ownership life out knowing exactly what it's going to look like for the next 30 years. And that's what I encourage all your listeners to seek out if they're considering buying a home.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.